Good morning, good morning. Hey, Sandy, how are you? Good morning, everyone. Welcome. Welcome to our Wednesday, the 16th, Globex session. Hey, Raj, good morning, brother. What's up, Sandy, Kevin? So, let's get to it. And so we have change, okay? So the theme of this morning is change, okay? We have a gap. We gap down. So something changed in the overnight, okay? We closed in that 54, or is it 54.20 and something, 54.30. We opened gap down, okay? So when a market does that, it means something has changed. So what we've done essentially is, let me just bring this back. There we go. We have a look above 54.65, right? We looked above it and then we failed, okay? So a look above and fail, the business for the trade is as follows, okay? The market looks above a level and sellers engage, right? So yesterday, remember how I was telling you that we were having trouble staying over 54.65? Does anybody remember that? Well, go back and check the tape I did. All right. So I said, when you have a look above and fail, it means the sellers, they're running out of customers, right? So what does Walmart do when it runs out of customers? It puts the product on sale, and that's what's going on right now. Now, 53.42 and a half is a big level for me. It's the bottom of one of our zones. And you'll notice that the overnight low is 53.40, so we did a look below 53.42 and fail of that particular level. Will that hold through the overnight? I'm not sure, right? If we take out the overnight low when London opens, you want to look for 53.20 and a half, or sorry, 53.20 and three quarters, then 53.0675, then 52.67, down to 52.27, 51.87, and the bottom of this zone is 51.48, and that's where the shorts are trapped from 4 days ago. Okay, so that's the down scenario. Now, what happens if we don't get back underneath 53.42? What happens if we can't take out this level and stay underneath it? What's going to happen is this short-term inventory of 2 days needs to be cleaned up somewhere in here, and you'll get sideways motion, maybe between 53.42 and 53.85. That would provide us with some nice trading opportunities because it'll go back and forth. Don't expect this right away, right? Expect this or sideways. But 53.42 is your gatekeeper to lower price. We went 2 points underneath it so far and came back up, and now we're trading 53.60. That's almost 20 points higher. Okay? So once again, the business has changed because we have a gap down. which means we have trapped longs above the overnight high, right? The overnight high is 54.03 and 3/4. Longs are trapped and they don't all sell at the same time. So we're going to watch that selling, right? They sold it under 42.5, stopped selling, the market came back up. So now we have a tactical map of what's going on, right? It's a bird's eye view. Now, let's go from the helicopter and we're going to drop down into the neighborhood and see what's shaking down there, okay? So I've posted this graphic in the room. You guys all have access to it. Please use it. All right. Now, we're going to look at the overnight profile. You could see here's our big gap, right? Our big gap is from yesterday's low down to the overnight high, right? That is a huge chunk of supply that's sitting there, and that's going to be resistance if we get back up there, okay? So, how do we trade this, right? How do we trade this so we don't get into trouble? So I've gone and I've marked all the upper stops. Sorry, let me just put in the previous day low, right? And the overnight point of control is right here. It's actually above us. So you could clearly see that all of this inventory is above us, right? That's like having somebody pushing down on your head. That's called resistance, okay? So we are quite a bit lower, and we have single prints here. Now, single prints to the downside, it's almost like a gap in the middle of the trading session, right? We have supply trapped above these levels, above 65 to 67. That's why when we came up there, they sold into it. Hey, John. Now, these kind of trading situations are a little difficult, and a lot of people are like, should I be buying the dip? Is it going to find the bottom? Are we going to keep going lower? Are we going to go back up? If you are a day trader, really none of that matters. So you can free your mind and go through this process that I teach, which allows you to go and make some money, right? Without trying to figure out the high and the low of the market. Let the billionaires do that. You go and draw your balance zones, and it's business as usual for you. You know now, tactically, that there's supply above you. So what does the common sense trader say? Well, there's supply above. So if I do go long, if I'm doing the look below and fail, don't expect as much, right? Because there's other sellers other than just me. You with me? Yes? No? Does that make sense? If I'm a seller and there's competition, will I be able to charge more? Think about it in a practical way, right? If I'm selling and GoldenEye is selling and Lonergan and Raj and Kevin and Supra and Kevin, and they're all selling at the same crap, am I going to get the highest prices if there's more sellers? I'm not. So you manage your expectations and you don't put in a buy and hope for 30 points and not take profits. Make sense? If you're a short seller, right, stick to the look above and fail, right? Don't just short in a random way because you think it has to go lower. So what we do is, let's go anchor our VWAP, right? I'm going to do this step by step. This is how you deal with a gap, right? There's always gap rules and things like that, and that's all great. But how do you tactically deal with this so you can actually make some money, right? So you look for a nice balance zone, okay? So I'm looking at the bottom here. Let me just get rid of these VWAP and the standard deviance here, right? How many trades would I suggest in a $10,000 account? What is your level of skill, Sukrab? Are you consistently profitable? If you're not consistently profitable, right? Because I don't know you, so I would say if you're not consistently profitable, I would leave my $10,000 account alone and I would learn to trade using funded trader accounts. Pay the 30 bucks, the 40 bucks, whatever it is. You know what I mean? You're a beginner, do not touch your own money. Use a funded trader account to learn the software, to learn how to trade, right? And to learn discipline and good business habits. Does that make sense? See, I caught you right where you're supposed to be. Take that $10,000 and just get it somewhere where you can't touch it, right? Spend whatever it costs, 30 bucks, 40 bucks. Get a funded trader account. You know what those are? Right? Do not touch your own money when you're learning how to trade. If I can give anybody a piece of advice when they're starting trading, is to not touch their own money. You are going to burn through it so fast, it'll make your head spin. Does that make sense? This will save you a massive amount of financial and emotional heartache. Right? That's what they're there for. They're to teach you how to trade and to teach you discipline. Do not trade your own money. Right? And take your time and learn. Right? So I'm looking at a balance zone. Right? Great question. That's a really good question. I'm looking at these lows and these highs. And then when we can't get over that high, do we come back to that low? I'm not sure about the lows. I'm just looking at this. This should work. Could be a couple of ticks off, right? But I'm looking for two-sided trade. What is two-sided trade? I'm looking for the market makers to be buyers under 53.49 and sellers above it. Because the sellers here are the same people who buy here or stop selling. So that's two-sided trade. Then what I'm going to do is I'm going to go and double it to the upside and see where our profit zones are. Right? Now, yesterday the balance zones were small. Okay? Today the balance zones are a bit bigger because the range is bigger, right? So when the range is bigger, the balance zone is bigger. Okay? So it's looking like we have a look above and fail of 53.64. So let's see if we can come and take out these the bottom of these candles. And we should slow down on the selling somewhere at 58. Okay? Yeah, you don't want to use your own money when you first start trading. It's a waste, you know. Um, it's really a waste. Those funded accounts are the best thing because they teach you discipline. Hey, William, how are you? How's beautiful Long Island this morning? So VWAP is up here at 74. I set my VWAP at the 23-hour open, right? So the Globex open, you're up in your funded account. Beautiful. That's what I like to hear. Right? Now, make sure that you withdraw that money, William, okay? Remember, every Friday, take money out, right? And that's for all of you, okay? When you're making money, get it out of your brokerage account. Do not try and grow your account, right? You have to get your money out of your ego is going to blow all that money if you leave it in your account. I've seen it happen a million times, right? And I've seen it happen with people who I've told a million times to get the money out of the account. They leave it in there, right? Don't be lazy. You have to get the money out of the hands of your ego, especially if you're an emotional trader who gets emotional and then all of a sudden the money is gone. Okay? Get it out. Right? So we still have a seller. We went into those single prints for a few ticks. The seller is still there. Okay? So we're looking for trades now, right? Our cost basis is between 46 and 52. 2 times cost basis is up to 64. Yes, here, just DM me. Hang on. You're having a problem with Discord. Yes. Did anybody reach out to you? There's some sort of issue with LaunchPass right now, so please be patient. I don't handle any of the billing, but if any of you are having problems, just send me an email at vwaptrader1 at gmail.com, right? For any of the courses or access to the room, I'll find a way to get you guys sorted out, okay? And for my coaching class, Sukrab, um, email me and we'll get you sorted out, okay? Not a problem. While we're waiting for the market here to figure out what it wants to do, right? So, my pleasure. Yeah, I saw some news about Nvidia and it pulled the market down a little bit. Let's see how the market absorbs that information. I was looking for a liquidation, you know? As soon as you get a payout, you know what? I would I'd love to have somebody from Long Island in my coaching class. I do a one-on-one mentorship and it's a lifetime membership, so you pay one fee and then I'm with you. I basically will haunt you until you're profitable. It's like having an annoying old uncle who just keeps bugging you. Hey, Patachi Trader, how you doing? Good morning to the Middle East. Hope things are well there. So you can see that the sellers are engaging here, right? Look, they're they're coming in right here, right? So now if some traders, right, what they'll do, this is a tough scalp, right? This is a tough scalp. So if you are trying to build a position and say you're shorting, right? You short one at, 61 and three quarters, one at 62, and you're shorting up to like, I don't know, maybe 62 and three quarters. you put some orders in, your out is 64. Okay? So how in the old days what they would do, right? When we used to, ride horses to work, right? They would build a short here and then this would be your out. Can a cost basis be drawn diagonally like a parallel channel? I think it is a parallel channel. Yeah, it's just a box. That's all it is. Real simple, right? So say you're short, I shorted one at 61 and a quarter. I had an offer at 62, didn't get taken. But you see here, I think they're buyers here. See, they kind of stopped selling here. So if I'm short, I'm going to go put a bid at 60 and a half. Just see if I get hit because I'm just trading the micro to see whether my brain is working. Okay, now I'm short 2 at 61.88. That's the average on 2. And if the market starts getting above this level, I know I'm in trouble, right? And this is how you trade out a position, right? But you have to be able to close it, right? If I start getting into trouble and the offer starts lifting, now I'm short 2 at 61.88 and it's trading 62 half, right? I'm just trying to walk you through the process, right? I'll start to cover this thing and start buying the ask, right? Now I'm stopped out, right? So I'm flat. Do I trade? I just did. Or just talk all the time. That kind of sounds rude, doesn't it? Uh, well, I'm trying to teach people, Hal guy. Do you trade or you just talk all the time? Oh, okay. I was just in a trade and I got stopped out. I don't know if you were listening. Uh, some people's kids, eh? Oh man. Well, everyone, uh, who knows what he wants? He just wants. Some people are, agitators, right? That's okay, right? So I was trying to show you guys, right? Uh, how to manage a position if it's going against you, right? And to learn how to take losses quickly so you don't get out of control and start losing too much money, right? I'm just going to get rid of this guy. There. So I'm trying to help you guys out. I'm not charging you for this YouTube, right? I would remind everyone to try and be respectful. If you can't, don't let the door hit you on the ass on the way out. Let's see. Candles are a little tiny here, right? I might have been early. And when I first start trading, I do expect to get stopped out. That's why I trade with the micro. When I first start trading, I start looking at the market. So if you do take a loss, you take a $20, $30 loss. Yeah, we don't run a signal service. We try and teach people how to trade, and people are really, and that's the thing. On social media, everyone's a tough guy on social media, right? They'll tell you things that they'd never tell you to your face, right? Good thing was I was a bouncer for 4 years, so dealing with rude drunk idiots is it's not a big deal. Okay, so we got a seller here, right? Seems like our seller is right here at 62. Can we lift and clear that seller? This is not the best price action for trading right now. It's a little slow and it's a little creepy. I miss selling stock. I don't miss being a bouncer. Now everyone carries guns. But I miss doing deals. Doing deals is a lot easier than retail trading, and a lot more lucrative. You know, you build out a company and then you just sell stock all day. Create, buying, and sell stock into it. Let's see if we can get down to 58. And Dan, I was a bouncer 30 years ago, so it's a long time. I'm old now. So what I'm doing now is I was early on that trade, stopped myself out, maybe not patient enough. Maybe I should have reshorted it at 63 once the candles started coming down. So what I'm trying to explain, right, is that sometimes you'll take a trade, you'll get stopped out. Don't get all angry about it. See what you can kind of learn from the trade you took. So I was early, right? And I didn't give the market time to really show me what was going on, right? And that happens. So you adjust, right? Now we're in the middle of this zone, so there's no trade for me. So my rules are that I would only trade if it did the look above and fail, right? But here in the middle of the zone, there's no trade for me. So that way you'll save yourself from getting chopped up because you go long, you go short, you go long, you go short. Everyone's done that, right? And they get chopped out. This way, you take a trade, you realize, oh, I might have been early, wasn't in the right place at the right time. So now you've saved yourself some money by waiting for your setup, right? Most retail traders, they really have trouble not knowing when to not trade, right? So London's opening. Let's see if London can take out that 64. Because if they can't take out that 64, see that seller at 62, they came in. So if you're shorting now against that, you're looking for lower and you're looking for, I'd say somewhere around here as your first cover, like 57, right? So if you're short, say at 60 and a quarter, right? 62. Let's see if that seller is still there. If the seller's not there, there's no reason to be short, right? Let's see if that seller steps in. Now we're above 62, so I'm kind of not wanting to short it, right? A lot of the times we'll go and short the low, and then it'll start moving higher. Wait till the seller shows themselves. If the sellers don't show themselves, then don't short it. Like right here, we're above 62. I was like, okay, you know what? If that 62 seller is there, I can short it, and they're my backup. Does that make sense to you guys? Is it possible to foresee a choppy day? No, like if I wasn't doing this stream and I came in and I saw this price action right here, I would just go to the gym or something like that. I wouldn't try and trade it. So you just go and you sit down and you do your routine every morning. And as you go through your routine, you're going to go, oh, okay, it's choppy. You know, maybe I won't trade as much right now. You know what I mean? It's like you go to the ocean, it's kind of stormy or it's not a nice day. You know, it's hard to like know in advance if it's going to be choppy, right? So if you hit it now at say 60 and a quarter, right? Put some bids in underneath and see if you get filled, right? And if you don't get filled, right, you need that seller to be there. So we did a look above and fail of 62. So if you were lucky enough to hit the 60s, right, on a short, you had to cover quick, right? You have to be quick in this kind of a chop. So you're already learning, oh, you know what? I'm not quick enough. I'll trade less or I'll wait for better price action. Make sense? Sometimes the price action does not favor retail trading, right? And that's just a fact of business, right? Right? We're in distribution, which is kind of hard to trade. We're taking this product that we bought off the sell-off and we're selling it up here. Yeah, if there's major news, generally the market's a little slower, but we did have a gap down because of the Nvidia news after the close. And so the market has to digest that. Longer time frame, folks. You know, we did a look above and fail at 54.65. So there is trapped long inventory above us, and that's, you know, it's slowly leaking out. And the market is looking for some stability. So let's see if we get some stability today. and we'll see how the market handles the news. And what time is he speaking today? Mid-afternoon? Yeah. The next couple of weeks are going to be interesting. There's been a lot of change in the market. I mean, last week we had a 500-point day. That's not a normal thing that happens. So the markets are really, really adapting as fast as they can. Um, and let's face it, people who trade with a lot of money focus more on risk management and capital preservation at times when things are murky or not clear. You don't go and put big positions on, right? Thanks, DJ Trader. Distribution chop. That's what we're in right now. So this way, keep yourself from over trading. I took one trade, got stopped out, realized, let's wait for the next move. Don't worry, it'll be along soon. For some reason, I'm crazy short biased, right? So when I'm really, really short biased, I have to kind of check myself to make sure that my bias is right. Otherwise, you just keep trading short, getting stopped out. Got to check yourself sometimes. Now let's see if we can get over 64. Guys in the room are quiet. You guys still awake? When you determine the balance zone for the London session, does it change? No, I just keep it the same. I mean, unless we get a huge move to the upside or the downside, you just keep doubling them. So, climbing above 64, can we go through these single prints? And our next sellers are going to be right here. No, it's okay, VS, not a big deal. It's good to ask questions, right? The reason I keep the balance zones the same is it's the cost basis of the product, right? It's the cost basis of the inventory. Well, Howard, what are we doing right now, right? We had a sell-off, right? The wholesalers had to go in and buy, right? Now they're getting rid of that. Make sense? So this is balance, Howard, right here. You see? Right? It's distribution balance. This was accumulation balance. Now we're distributing. Okay? So now we have to wait and see the customers that come in now, right? Can we get back into this purple zone and get up to VWAP? How do you determine the red line? It's the top of these candles. The top of the candle before the move down is where the seller initiated. Here, let me show you. Right here. Right? That's the top of these candles. That's why you guys will have a trend line. Distribution isn't necessarily a selling channel. What's a selling channel? Distribution is selling. So the sellers saw buyers, they're raising price, right? We cleaned out those single prints, right? Now, Howard, if you're looking at a look below and fail, right, of 64, you know there's a seller up here at 67, and you know if it gets over 67, there's going to be sellers at 70 and at VWAP, right? So now let's see if it holds the 64s. Or is that just a stop run, right? Or what you guys call a false breakout. So if you're long like 65, I grabbed a couple of micros at 65, but I'm selling them at 67. And the last one at 66 and a quarter. Not the greatest trade, but I'm just testing it to see if my brain is working. Right? And your next sellers will be probably here. No, the best kind of distribution, 1,000, is when it just goes sideways. Because then you can take your time and sell more product. It's much easier to distribute in a sideways market. How did I get my first range? My first range was the blue. So I looked at these highs and these lows, and when you go from that low, you go right to that high. And it's just this back and forth. And then you just double it. It's really simple. That's a 1 minute chart, William. But it works on any time frame. The reason it works on any time frame is because the business is always the same. Hey, Zeno, what's going on? What if the range isn't that clean? You'll find, William, because of electronic execution, the ranges are pretty clean. Now, I've been doing these balance zones for years. And, like, for example, my longer term balance zones, like, here's my one balance zone from 2020, which is 2749 to 2810 on a daily chart. And the zones will work all the way. It's just because it's a two-sided business and it's accumulation and distribution of inventory. The chart is just a sales chart. Once you learn how to see it, and it's just a matter of time. There's no special skill involved. It's just looking at it and looking for that balance every day. And what I did when I first started was I'd look at hundreds of charts and I'd just keep drawing balance zones. And then I'd just sit and watch to see if they work, right? And of course, not all of them are going to work. But after a while, you'll train your eye and it'll automatically go and pick it up. It's pretty cool. Now, we're putting the product on sale. We couldn't find any buyers over 64, over 62, over 61. So now, price reduction, right? Let's see if we could take out the 58s and that 57. If we can't, it's going to rotate back up. You're going to have trouble doing it yourself right at the beginning, right? Just work through that frustration. You'll get there. I promise you it'll, like everybody says the same thing. See, there's buyers at that 58, 59 level. So there's sellers that try to, the software is programmed to move away from the buyer. If the buyers move lower, the software will push the sell orders lower to compete, right? William, what I would do is just draw them out every day. Like go do balance zones for Microsoft, for ES, for Apple, for Tesla, right? Just keep practicing over and over and over and over and over again, right? Just keep at it. It took me a while. It took me like months, because what happened was Dalton said it once and he didn't repeat it a lot. And it was the easiest thing for me to remember. Find a balance zone, double it to the upside, double it to the downside, you'll get targets. And then the longer I worked with them, I realized, okay, I can build a trade execution plan around this. So I know when to trade, when not to trade, and how to manage risk, right? So if you've been doing them a week or two, it's going to be a little frustrating. No, I did not take the short trade, right? And it does work on time frames, on other time frames. Just keep practicing, right? Just keep practice drawing them out and it'll get better and you'll see that it works. Like, here we have the SPY. I used this area as a balance area, right? And you'll see that the levels work quite nicely, right? It's going to be frustrating. Here's the thing about trading. Retail trading is insanely frustrating, no matter what type of retail trading you're doing, right? You have to work through the frustration. You just have to embrace the frustration. It's the most frustrating thing I've ever done, and it took me years of stumbling around to finally put two and two together. And then it took me years to even figure out a way to teach it so I could keep it simple, right? This this business, retail trading is the hardest job in finance, right? If you work at a brokerage firm, the firm capitalizes you, they manage your risk, they watch what you do. You have none of that when you're in retail. So you have to be your own risk manager. You have to be your own head trader. You have to be you know, your own boss who owns the firm and is looking at your capital, right? You have to do the job of three or four people that you would normally have in support roles when you work at a firm. That's why retail is really hard, right? And also retail is difficult because of the amount of misinformation there is out there and bad information and bad actors, right? Exactly, Trader M, right? It takes time, especially if you have people giving you wrong information. You got to clean out all that wrong information and then start again, and then you start something else and start again. And that is a painful process. And that's why you shouldn't use your own money when you start trading, right? Do not use your own money. Use the funded trader accounts and, you know, and pay a fee to learn. Now, if we take out that 56, everyone who's long above 56 is not going to be happy. Anyone who's long here. So if we start taking out this, we're going to come back into the 32. See, look, we dropped, found some buyers. Now come up, let's see if, where are those sellers? Are they going to be here? Right? Are they going to be here? Let's see if we can crawl back over 62. Do you see how the candle chart tells you a lot of information? All you got to do is pay attention. You know, it was showing you that, hey, we're going to have sellers here. So when the market did this and came back up, look, they sold right there again, right? Spend some time watching, folks. I know everybody really wants to trade and make money, but spend some time watching and watching price action. Draw the levels out and watch, right? You got an 80% win rate? Oh, that's great. Well done, William. You know, you got to make it into a business because it is a business, right? Once you treat it as a business, well, you're going to do things in business that like you would never like your behavior in a business environment, right, is going to be different than your behavior on holiday or at a casino or those kinds of things, right? See how it's kind of getting hung up at that 56 and a half, 56 and three quarter? I'm insanely short biased, but I have to let the chart let me know what's going on here, right? And I never trade in the middle of a zone. So the next trade I would be looking for is for the market to come back underneath 52, get into here, and then come back up over 52 for a long. So that'd be a look below and fail of 53, 52. That's the next trade I'm looking for. Right here, I got no business being in there. Right? Now that's frustrating for a lot of people because they're like, JJ, I've got a couple of hours before I go to sleep or before I go to work. I got to get a trade in before I go to work. That's not how we do business, right? Sometimes there's no business to be had, right? And just because you need to get a trade in the next hour, the market really doesn't care, right? If the business setup is not there, if the business reason for the trade is not there, then don't take the trade, okay? It's just a waste of money, right? If the business for the reason for the trade exists, take the trade. Oh, you're welcome, William. Yeah, this is not worthy of your money, right? Remember, when you take a trade, you're putting money down, right? Is this worthy of my capital right now? Right? That's why I never mess around in the middle. Let the larger traders work this out. I'll look for this. I missed this, right? Because I was talking, right? I don't mind missing a trade here and there. It's okay, especially if I'm doing a session with you guys, right? My job now is to teach you guys and not to trade right now, right? And eventually, like when I get off screen with you guys, if the opportunity's there and my setup's there, I'll take the trade. I use the balance zones. I use these ones for the day, William. So I redo the same thing every day. So if you join me in this morning session, I do the same thing. I go and I look at the larger picture to see where if inventory is above us or below us, it's above us. So I know that more often than not shorts are favored, right? The other thing is then I'll go and I'll look at the structure, right? And then I do the 1 minute charts. Do I ever hold a contract overnight? No. No. I don't swing trade. I don't hold. I have a fundamental problem with holding futures overnight, especially when there's a news cycle that could wipe out all your money. Do you know what I mean? Like if you were holding long overnight last night, now you're gapped down 70 points. You see, the risk is not worth it. Not, and the people that I trade for, they don't expect me to do things like that. Does that make sense? I'd like to do my business that day. If I make money, great. If I don't make any money, that's fine, as long as I didn't lose a lot. And the next day is a fresh start. I'm 57. I've been trading for 33 years. I just don't want the stress, right? How does the tariff crisis compare to the other ones that you've seen? Well, I went through long-term capital in 1997. I went through 9/11, went through the mortgage crisis, went through the flash crash. Um, you know, this move down has been historic in the ranges. Um, but I have to say, the way the U.S. markets have been built, it's handled the stress pretty darn well. You know, um, one thing I do caution folks of the way these markets are structured and built. If anyone who's ever taken a company public knows that there's a structure of how you structure a company, how you structure a deal. Markets also have a structure. Right now, they're structured in an asset gathering revenue generation model, which means that revenue is generated by Wall Street on gathering assets and charging a fee. That model is dependent on lower interest rates, and it's also dependent on the warehousing of large positions. So, like Apple has 16 billion shares available to trade, maybe 100 million trade on a daily basis, if that, right? Yeah, it just started in the 90s, and long-term capital was really bad because they actually shut down trading in the New York Stock Exchange. So we don't have those things happen now, which just shows that these markets are pretty well built. that they don't actually have to shut down trading. Oh, there's just no trade here. And that's it for me this morning, everyone. Have a great day. Stay out of trouble. Wait for the good trades, okay? And we'll see you at 9 a.m. Eastern Time. Thanks, everyone. Bye for now.